Good morning, everybody. Hey, welcome to Tuesday, January 12th. Glad to be back with you after taking a couple days off uh, to uh, to spend some downtime for our anniversary over in Sarasota. But glad to be back, and I hope that you had a great weekend. I know yesterday was not the day we'd all been looking for, but hey, maybe it'll bounce back today. That will be our conversation with Dave, as well as hopefully a few more earnings coming through today as we start to get more and more into earnings season. So we're looking forward to that conversation with Dave coming up here next.
7 Light FM. Beyonce is there. I'm Morning Dave. We're at 8:38 now, 22 before 9. Time to check in and see what's going on with your money. It's a weird time on Wall Street. Things are doing stuff that conventional wisdom says it shouldn't do and doing stuff that conventional wisdom says it shouldn't do. And that's why we have a partner in crime in this effort. Let's go down and talk to Phillip Statler from Statler Financial Services. Phillip, how are you this morning? It's good to have you on board this morning, as I can't explain any of the junk going on at the moment. Can you?
Well, I don't know that I can explain it either, but hey, we've always said the markets are the markets, right? Sometimes there's no rhyme or reason for what they do and how they do it. And yesterday, let's face it, Friday before, we kind of, we set some new highs, I think, and so there was just some give back yesterday, which, given the political climate, what's happening, not to be unexpected, I don't think.
Probably not. To set the table, it was a modest off day. It looked a lot worse yesterday morning at this time while I was doing it. Dow ended up down by about 89. Standard & Poor's was off by 25. Those were a quarter to two-thirds of a percent. Not a good day by any measure, but not a major sell-off. NASDAQ, on the other hand, took it right on the shins, down a percent and a quarter, down 166 points. My gut reaction was that some of the accelerant poured on that fire was killing Parler and throwing Trump and a bunch of the more inflammatory right-wingers off of social media. That's got to change the statistics for some of those social media companies, and that's their bread and butter. So they kind of got sold off, didn't they?
Well, it could be that, that's true. We're going to see some changes there. And the activity is going to slow down, which sometimes the activity is what causes the revenue. So, it's one of those things we have to sit back and look and see and determine really and truly how much social media really does draw the stock market as a whole. I'm not convinced it does, but who knows? It could have more of an impact than I believe. But there's just a lot of other factors out there right now with the political spectrum.
Yeah, we are going to kind of have a practicum here, see whether or not all the activity on Facebook, Twitter, and Instagram and the rest of them actually generates any ancillary money beyond just those individual stocks. I mean, granted, they're high-flying, high-priced stocks, and yeah, with a decrease in activity, odds are they're going to suffer a little bit, but are they going to take any of the other techs with them? That we really don't know for sure, do we?
No, we don't. I mean, I saw this morning that like Zoom is getting ready to do another offering of like $1.5 billion stock offering. And I've seen some headlines here or there that they're actually thinking about playing in the email, telephone space. Well, they're already in the kind of telephone space, but the email space, and competing really kind of with the likes of Google and some of those other companies.
Well, they certainly have a user base they developed during the pandemic. It wouldn't be a bad time to launch off onto some ancillary line of business, that's for sure. By and large, it's one of those doldrum weeks until we get into earnings season. I'm getting a whole lot of re-ratings and tidbits worth of news. I mentioned a few of them yesterday. Most of the re-ratings by the firms were upward, which is good news. I noticed LendingTree put out some guidance saying they were expected to beat their planned P&L margins for the year. Moderna comes out with a statement this morning saying their research anyway indicates that the Moderna COVID-19 vaccine will provide at least a full year of protection for people that take that. That's kind of an optimistic sign to give us some buoyancy, wouldn't you agree?
I would, and they're thinking that maybe after, and they're following their phase 1, 2, and 3 trials. Those folks that did that, that's what they're following right now to kind of ascertain how long they think the antibodies are going to stay within our bodies, and at what point we'll need a booster.
And
Um,
that's
and
been the variable for all of these things because we don't know anything about how long immunity lasts after you have it or after you have a vaccine. So that's useful information.
it will definitely be useful information, and I think a year is probably. Obviously, I would like it to be longer than that. I think the general public would like it to be longer than that, and it may very well be. But there was some hesitancy because there was some thinking that, well, if you get the if you get the COVID-19 itself, you may only have 6 months, of immunity before you're subject to it again. So a year is I think a good thing.
It sounds like good news on its face, and we'll find out how long it actually lasts as time goes on, because as we say, it's completely uncharted territory. I was mentioning yesterday while I was soloing here that I expected earnings season to start midweek. We're going to have a lot more to talk about in terms of stock offerings and quarterly reports. I gather from what you were telling me before we went on the air, starting on Thursday, right?
Yeah, not much else coming out tomorrow either, Dave. But come Thursday, we have BlackRock, we have Delta Airlines, First Republic Bank. So those are some common names and some big leaders. And then Friday's the big financial day where we'll have Citigroup, J.P. Morgan, PNC Financial, and Wells Fargo all before the market opens.
All should make it interesting, but for the moment, we're mostly just grasping at straws and trying to guess what the market is going to react to. About the only report that we had out this morning, at the very least, is a name most of us recognize around here. Albertsons reported. How did they do?
They did. Albertsons reported earnings better than expected. They came in at 66 cents a share versus the 42 cents a share that was expected. Revenue also beat. So they did well there. They also came in and raised its full year guidance.
Cool.
By about 10 cents a share for the year. So good there. They're up this morning. Let me see what the current number is here. They're up 4.2% this morning.
That's a pretty substantial number. I'm seeing a lot of wild swings this morning, but 4+% is a good move in any world.
Oh, definitely. Yep. That's good after closing up about 0.8 yesterday.
Understood. About the only other thing we're going to see that's going to move the market from a macro standpoint this week is the CPI number, and I think you mentioned to me that's due out tomorrow, isn't it?
Yes, sir. The CPI comes out on Wednesday, and then of course we got unemployment, first-time claims, and stuff coming out on Thursday.
Understood. So it's relatively quiet, resetting an off day yesterday, substantial off day for NASDAQ yesterday. 45 minutes before we opened this morning, what are we looking at so far on the equities?
I'm going to call it's green, but it's not very green. So it's a tinge of green anyway. We got the Dow up less than 0.2. We got the S&P 500 up 0.1. And we got the NASDAQ now up less than 0.1%. So so definitely green, but very, very light green to say the least. The commodity side, well, there's been a little change there because it was all green when I looked at it earlier. Gold and silver are trading down right now, Dave. Silver's down about 0.2. Gold is down about 1/3%. Crude oil, though, is moving right on up. It's up 1.17% this morning to $52.87 a barrel right now.
Now, that's a better part of $1 a barrel more than we had yesterday morning at this time, too. So day over day, it's a substantial change. We'd mentioned this before we went on the air, but one of the things we watch to see what the mood of investors is what the federal bond rates are looking like. Your point was taken. The 10-year Treasury note is up by a full 8 basis points this morning, which kind of indicates at the very least that investors are moving their money someplace to put it at risk, just not 100% sure where at this point.
Yeah, I mean, this is the highest it's been, I think, since January.
Yeah.
It's, right now it's yielding 1.16%. And I can remember when it was, oh my gosh, was it, down in the mids, 0.5% or less even. So It's definitely made some strides. I did read an article. I found this interesting, Dave, as we close out this morning, that the CTA funds, which is a hedge fund, believes that it's getting close, that the 10-year treasury is getting close to that point where they think that they may start shorting it.
That's an intriguing thought.
That was interesting.
Shorting government bonds is just one of those things that almost sounds like a foreign language. Overseas markets, Asian rim generally up by just a little bit overnight. European markets off, but again by just a little bit midway through their trading day. As we said at the outset, sometimes almost impossible to figure out which way the markets are going, and guessing which way they're going to go, well, that's something that Harry Houdini couldn't do. That takes advice to control one's risk and know where you got it. How do I find you to find that risk, Phillip?
That's right, Dave. Nobody has, that crystal ball. But what we do know is that risk is the one thing that you can control within your own portfolio. It's one of the things that we help you analyze. Give us a call at 863-382-0037 to schedule your financial x-ray to determine what that risk looks like for you. Follow us this weekend for our radio show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 730.
And back here again tomorrow morning on Light FM. Phillip, thank you so much. Glad you're here, and we'll see you then, all right?
All right, man. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, everybody. I want to thank you for joining us today. Remember, if you don't know with certainty how much risk you have in your portfolio, it is vitally important as we head into this year that you understand what that number is. Give us a call and let us help walk you through that to determine what your risk number is.